Hello and welcome to ET Market Smart Talk. Well, I'm your host, Kshitij Anand, and today we are diving into one of the most exciting shifts in India's investment landscape, and that is the rise of REITs and whether they are emerging as a favorite among retail investors. Well, joining us is Somi Thomas, who's Executive Managing Director, Capital Markets at Cushman and Wakefield. Somi, great to have you with us.
Thank you, Kshitij. Thank you.
Thank you for taking the time out, Zomi. And well, India poised 7.8% sort of GDP growth in Q1 FY26. So, how is this, shaping real estate demand across residential, commercial, and alternative asset classes?
Great. Thank you for the opportunity, Kshitij. I think it's important to look at the context of real estate and the economic growth of India, right?
Sure.
Real estate drives from the broader economic growth, whether it is warehousing industrial, which has a direct linkage to the industrial activity, economic activity. But through the GDP growth, we are also seeing economic and job creation, economic activity and job creation. That leads to more robust residential demand. But one of the fundamental things that is important from an Indian real estate perspective is the office sector. And office sector is doing well because of the GCCs, which we'll talk more in detail. The global capability centers is really adding very high value jobs. There is a sense on IT versus GCCs. In the GCC space, we are adding more higher salary jobs, right? That really helps the market to sustain the growth momentum in the residential space, in the retail space. And of course, these companies are taking more space, and therefore it is helping the office sector as well.
Absolutely. And institutional real estate investment touched, around about 1.4 billion in Q3. So what's driving the strong domestic investor participation there? So if you can touch upon those points as well.
Sure. So today what is happening is that Indians like real estate, right? But there was no vehicle to play real estate barring the residential sector or buying some plots or land. Now, buying land is more complicated for many families or many individuals because of the underlying complications on encroachment or title issues and things like that, right? So over a period of time, what has emerged from 2019, India got the first REIT listed by Embassy. And thereafter, we have now three more REITs got listed, Office REIT, Mindspace, Brookfield, and Knowledge Reality, right?
Yes.
Now, we also have a retail REIT, Nexus listed. Now, looking at the performance of these funds, there is definitely a lot more interest from the retail investors. It is a very important asset class that they can consider. And there is a robust framework which is monitored by SEBI. There is, if I'm buying a smaller office space, there is always a vacancy risk. There is always a tenant management risk. Now, I don't have to do all that. There is a professional asset manager who is driving the performance of the properties, and I get my consistent dividend every quarter. So the track record and the performance of the REITs is what really is convincing the Indian retail and high net worth individuals to invest in the REITs. Now, before I read, your question was more on the institutional investment segment, Kshitij.
Right.
What is happening there is that the same ultra high net worth individuals seeing the dynamics of India's GCC and the office space, they are giving money to the fund managers to deploy, right?
Sure.
So there are multiple platforms like Nuvama as a equity fund platform. Edelweiss has lot more money is coming into the office segment, even from domestic investors, right?
Sure.
That's really helping the institutional investor segment. So underlying performance, robust demand, consistent returns, this is what is helping the markets to perform.
Absolutely. No, commercial real estate is definitely doing well because office assets dominated institutional inflows around about 57%. So what explains the resilience of grade A commercial spaces despite hybrid work, you could say that?
The hybrid work has been debated and discussed for a long time, Kshitij. But at the end of the day, companies want employees to come to their offices because that's where the ideas will generate. The networking happens. Office is not a place to do work alone. It is more about group team meetings. You will have a bond. In between, during COVID, the attrition levels of a lot of companies were really high. One reason for that is, Kshitij, I don't know my boss, I don't know my colleagues. I am working
Mm.
in home, I changed one job, but in the new
Correct.
office, I haven't met anybody. So the
Sure.
lack of bonding, lack of networking, lack of this is also causing something.
Mm.
Organizations realize that. Second most important factor is that when people come together, they
Mm.
collaborate. They collaborate more. That collaboration is the most important productive tool for all the organizations.
Sure.
Second and third most important point is ideas. You
Mm.
want to work on new ideas, you want to do more things. That can only happen when people come together and brainstorm, right?
Sure.
And definitely, human being is a social animal. You need to be in
Mm.
the social setup and you have your network. So these are the factors that contributing to the robust demand for office space. I think the
Mm.
work from home is kind of completely in the past right now.
Right.
Most organizations are insisting at least 3 days a week, if not 5 days a week.
Okay.
So there is still pent up demand expected to happen from some of
Mm.
the companies who could not scale up their office space even though they were recruiting. So what's
Correct.
happening, Kshitij, right now is that there is more demand coming from because during the post-pandemic years, they never
Mm.
scaled up. They recruited talent, but they didn't have office space. So
Right.
we still having that pent up. That is why this year, Kshitij, for example, we would see close to 90 million square feet of gross absorption,
Mm.
and the net absorption will again be a record. We will have
Mm.
50 million square feet plus net absorption this year, right? We are
Okay.
yet to close the year.
Mm.
One more month to go, we will know the exact numbers. But it
Sure.
is record after record. So
Mm.
2024 was better than 2023. Now
Yeah.
2025 is better than 2024.
Okay. Absolutely. That sounds interesting. And let's talk a little bit about the performance, which I'm sure retail investors would want to know, because the REITs delivered 9 to 29% kind of a return over the past 12 months, outperforming the BSE Realty Index. And so, can we say our REITs, becoming the new mainstream asset for retail investors?
Absolutely, Kshitij. You said golden words there. It is
Yeah.
definitely a most important diversification tool for retail investors.
Hmm.
You just mentioned about reality index. That's the
Sure.
residential companies and put together. But if you
Sure.
generally look at the overall market itself, has not given great returns.
Hmm.
Even
Yes,
if you
absolutely.
compare with Nifty or Sensex, REITs have given better returns. Now,
Hmm.
with the
Hmm.
stability, what we need to understand, Kshitij, is that REITs completed real estate income generating where multinational companies have taken the office spaces, the downside risk is quite low. So
Sure.
with the lower downside risk, if you are getting double digit returns, that's
Hmm.
something which is every investor would love to. So there is
Sure.
always a time period of understanding the asset class, which is
Hmm.
2019, like I said, the first REIT, and the
Hmm.
last REIT got listed this year, which is the knowledge reality. So there is an understanding, comfort that they've got, quarterly
Hmm.
dividends track record they have seen. They have
Hmm.
also seen, even in COVID times, there was a consistent occupancy and consistent delivery, consistent dividend that the REITs are given. So this
Right.
gave a lot of comfort. So I think
Hmm.
it's a matter of it is definitely arrived in the mindset and the wallet share of any retail investor today to have an exposure to REIT, which gives
Right.
stability and in certain times better growth than the other asset classes. 2025
Hmm.
was one such year. You probably got
Right.
better returns than equity.
Absolutely. Well, the first REIT was launched in 2019, as you said, and cut to 2025. SEBI is classifying REITs as equity instruments. So, how do you see investor participation and liquidity evolving in the next few years?
It really helps, Kshitij, to enhance the participation from institutional and retail investors. Equity classification helps a lot of mutual funds also to take exposure as per the equity because you have different
Mm.
categories of funds, and that really helps. Secondly, from an individual investor's perspective, also that really helps them to increase their exposure because that's going to give them more consistent returns by taking lesser risk.
Right. Right. Absolutely. And what are the biggest shifts you're observing in the residential demand? Could be premium, mid-income, or affordable segments. Perfect. We could say that.
Yeah. So good point, Shidij. At the end of the day, even today, the premium or upper premium, I don't call it luxury. And again, the definition of luxury differs from markets to markets, right?
Markets to market. Yes, absolutely.
But that's actually doing well than the affordable segment. It's a reality
Okay.
today. So the service sector is really contributing to the residential demand. Service sector salaries are high. You probably have great GCC salaries. You also have a lot of IPOs happening in India. That means startups are unlocking value, right? So there is ESOP money that is coming into the markets, etc. So I think the markets are today most sustainable for the premium segment and upper premium. Luxury in pockets can be challenging because that definition of luxury is very different in different cities. Luxury is not just about the price point. Luxury is also about the size of the apartments, right? Now, prices being where it is today and the size of the apartment, it can become very unaffordable. But there are pockets or places where luxury is doing extremely well because that, like I said, the startup money is coming back. The IPO unlocking is happening with a lot of companies, and that's all coming back to the luxury segment because they are probably buying something for their end use perspective. So just to categorize that, premium, super premium or luxury is actually doing better than the mid or affordable segment.
Absolutely. And we're seeing rising activity in the high yield credit AIF category 2 fundraising. So is private credit, you could say that, becoming a mainstream funding channel for developers?
The answer is yes. There is obviously a lot more opportunity that the tier 2 developers are seeing in today's markets. The tier 1 developers obviously don't need private credit, but definitely tier 2 developers who are launching bigger projects, you need money for approvals. You need money to unlock value, say a last mile acquisition, buy TDR from the government or buy premium FSI. These things are required before the approval stage. So the private credit is really helping the secondary players to scale up the market. So we see a lot more action happening. And I think we'll continue to have it as long as the GDP growth rate and the resultant real estate growth continues, we will have private credit also growing in the country.
Absolutely. Now, lastly, will 2026 be the year retail investors meaningfully adopt fractional ownership, REITs, and tokenized real estate?
And I think REITs have already established it. I think we don't need 2026. They have already accepted it, and we are seeing that. From a fractional ownership perspective, I think it's a question about assets, because fractional ownership probably will come in smaller assets like 200, 300 crore. SEBI has given a restriction on 500 crores at this point of time. So what I think is going to happen is that if I come with a 300 crore property in Ahmedabad or in Indore, you will probably be more familiar and you probably be the people in that city and you are expanding the horizon. So you probably need, we have 5 REITs today and cumulative market capitalization of that 5 REITs are 2 lakh crore and cumulative portfolio is probably close to 170 million square feet, right? Now, for that has created its own size and scale for comfort perspective. From a fractional ownership, we probably need 30, 40 listings to even come to 2% of that share. It's not about comparing with the AUM. It's not about comparing with the size, but how many people are comfortable with the asset class today? In a Bangalore asset, people in Bangalore will probably be more comfortable. And secondly, the people in Bombay who are very seasoned investors, right? So you need to have a diversified portfolio that has to come in fractional ownership over a period of time. And that will probably give more confidence to the investors. And their track record is also something very important. Over a period of time, what is the experience of early investors? That's the advantage of REIT today. The early investors have got good returns.
Yes, absolutely. Well, on that positive note, thank you for joining us and sharing your insights on how India's real estate investment landscape is evolving, especially with REITs gaining prominence among retail investors. Thank you so much for your time, Soumya.
Thank you, Kshitij. It was my pleasure too. Thank you so much.
Thank you.